Palo Alto market activity ground down to a halt, with November sales dropping by 51% compared to November of last year. New listings came at exactly the same level as last November. But because the number of new contracts fell by a whopping 65%, the number of homes available for sale by end of November increased by 46%, measuring year over year. This is Michael Tallis with the Tallis team. Watch till the end, and if you find this information useful, hit the like button, share this video, and subscribe to the channel. We appreciate your support. Let's focus on the number of new contracts for a moment. This is how many offers were accepted this month. It reflects buyers' confidence, and for the last 3 months, it was falling. 47% fewer contracts were ratified this September than September of last year, 51 fewer in October than last October, and 65% fewer in November, also year over year. What caused it? We have to look at 3 major factors. First factor is the high-tech layoffs. Companies like Amazon, Meta, DoorDash, Lyft, Cisco, Salesforce, Stripe, Robinhood, Roku, Shopify, and many more announced workforce reductions. Workers facing or experiencing layoffs abandoned the housing market. Second factor is the interest rate. As Feds were fighting inflation, mortgage interest rates grew faster than ever, and for a short period of time exceeded 7% level. The fastest growth happened in September-October timeframe, when interest rates increased by 2%, pushing down housing affordability levels. This further reduced the pool of potential home buyers. And the third factor is the stock market performance. Many home buyers rely on their investments for the down payment. Double-digit declines in the stock values prevented many potential home buyers from cashing out and forced them to put their home buying plans on hold. With the number of new contracts falling below the historic norms, the number of home sales will continue to fall. But it may not lead to an increase of inventory. Sellers are also affected by the higher interest rates. Many homeowners were able to refinance their mortgages at rock-bottom interest rates in 2020 and 2021. For them, selling a home and buying a new one means that they have to obtain a new mortgage at much higher interest rate than what they're paying now. This type of consideration may prevent them from putting their home on the market. Another disincentive for selling homes in Palo Alto are taxes, both property taxes and capital gain taxes. If you owned a home in Palo Alto for more than 5 years, most likely you are facing a capital gain tax bill when you sell your home. At the same time, when you move, your new home may be subject to a higher property tax, even if you downsize, because Prop 13 limited property tax increases while you owned your home. There are ways to limit your tax exposure when you sell, but it is subject of a separate conversation. And finally, let's talk about Palo Alto home values. In Palo Alto, relatively few homes sell every month. 35 homes sold in November, 26 in October, 47 in September, and so on. On such a small, statistically small sample, there is no reliable way to discern month-over-month trends. $500,000 swing may be just a result of a higher number of entry-level, Palo Alto entry-level homes sold versus more luxurious properties this month and fewer month before. Looking at the year-over-year data, 2020 median home sale price is the same as in 2021, $3.3 million. To get a bigger picture, let's look at the prices at the county level, even though we're still getting mixed signals. November median home sale price slid down by 3.7% compared to November of 2021. The all-time price peak in the county was in April, and November prices dropped by roughly 15% since then. And if you look at 2022 as a whole, home sale prices are still 7% higher than in 2021. This is Michael Tallis with the Tallis team. If you are thinking about buying or selling a home within the next year, or even 2, call or text me at 650-766-6100 or email me at michael@tallisteam.com. I'm looking forward to connecting with you.